So while a lot of Wall Street is getting totally spooked by AI, there's one investor who seems, well, completely unfazed. In fact, he's building a fortress of calm and profit. So what in the world is going on? We're going to dive into the latest playbook from the Oracle of Omaha himself, Warren Buffett, and see what's really happening inside Berkshire Hathaway. I mean, just look at this. It's night and day. You got the tech-heavy NASDAQ taking a 3% nosedive, its worst drop in months, all because of these fears about AI valuations. And then you have Berkshire Hathaway doing the complete opposite. After a fantastic earnings report, its shares actually jumped 4.5%. So how is Buffett zigging while literally everyone else is zagging? Well, it really all comes down to the numbers. Berkshire isn't just getting by in this crazy market. It's absolutely thriving. And when you look at the figures behind it all, they are truly staggering. Let's unpack the financial firepower that makes this company such a fortress in the storm. Okay, first up, operating profit. Now this is the real bread and butter, the money Berkshire's actual businesses are making, from insurance all the way to railroads. In just the third quarter, that profit shot up by a massive 34% to nearly $13.5 billion. That's not just good, it shows you how incredibly strong the core of this company is. And what's driving all that growth? You might be surprised. It's insurance. The profit they make just from selling insurance policies, what they call underwriting income, it's skyrocketed by over 200%. This is the real engine room of Berkshire. And right now, that engine is firing on all cylinders. And all that profit is feeding this, an absolutely mind-boggling mountain of cash. By the end of September, Berkshire was sitting on over $381 billion. That's up almost 11% just since June. This much cash gives Buffett an incredible war chest to make a move whenever and wherever he sees a great opportunity. But here's something really interesting. With all that cash lying around, Berkshire didn't buy back a single share of its own stock in the third quarter. Now, that's a subtle but really important signal from Buffett. It kind of tells us he doesn't think his own company's stock is a screaming bargain right now. He's patiently waiting for a better deal. But, this whole story isn't just about the numbers. There's a real human drama playing out here, too. A pretty mysterious announcement from Berkshire has kicked off all this speculation that we might be about to witness the end of an era. So here's the deal. On Monday, November 10th, Berkshire is going to release a message directly from Mr. Buffett himself. Officially, it's about philanthropy, Berkshire, and other matters. And it's that last little phrase, other matters, that has absolutely everyone buzzing. And it's leading everyone to ask the big question. Is this it? Is this how the Oracle says goodbye? We all know his succession plan is in place, and a lot of people think a final, formal message to shareholders is coming. This could be a truly historic moment. And look, this isn't just wild guessing. The transition is happening. Buffett is stepping down as CEO at the end of the year, though he'll stay on as chairman. And for the first time, his successor, Greg Abel, will be the one writing the famous annual letter. So yeah, this message could very well be Buffett's final big address as CEO. So while we're all waiting for that message, his actions are already speaking louder than words. Let's pop the hood and look inside Berkshire's massive stock portfolio, because there are some huge strategic shifts happening right now. All right, as of today, these are the big three. Apple is still king of the hill, no surprise there. Then you have Bank of America. But look at that third line. A group of Japanese companies that, combined, are now worth almost as much as his Bank of America stake. That is a massive clue about where his head is at. And this shift is just dramatic. Buffett has been selling off his two biggest American holdings pretty aggressively. He's slashed the Apple position by nearly 70% in just 2 years, and he's cut his stake in Bank of America by about 40% since last year. This is not just a little trim. This is a major strategic pivot to cash in and free up a ton of capital. So the billion-dollar question is, where's all that money going? Is he just going to sit on it forever? The answer seems pretty clear. He's making huge bets on Japan. While he's selling off big names in the US, he seems to be doubling down overseas. That tells you he sees way better value somewhere else. And here's the proof, kind of like the smoking gun. Berkshire is getting ready to borrow money in Japanese yen. Now, why is that such a big deal? Well, think about it. If you're going to buy billions of dollars worth of Japanese stocks, it's way smarter and cheaper to borrow yen to do it. This is probably the clearest signal we're going to get that Buffett is gearing up for another big shopping spree in Japan. And here's the thing, this Japan strategy, It's already working beautifully. His big bet on 5 of these major Japanese trading companies has been a home run. All 5 of them are trading at or near their all-time highs, and his combined stake is now worth close to $33 billion. Wow. But Buffett's latest thinking isn't just about stocks and bonds. He's also given this really stark warning about the dark side of AI, the very same technology that has the rest of the market in a frenzy. Here's exactly what he said earlier this year. He warned that AI's ability to create incredibly convincing fakes could make scamming the growth industry of all time. He's so worried about this, Berkshire has even put out official warnings about deep fake videos of him floating around online. But what's fascinating is that this very modern warning about AI sits perfectly with his timeless philosophy about investing. It's all about avoiding scams, not just financial ones, but the emotional scams we play on ourselves that cause us to panic and make bad decisions. This quote from back in 2010 really gets to the heart of it. Buffett has said over and over again that success in investing isn't about having a genius IQ, it's about having the right temperament. It's about having the emotional control to stay rational and maybe even get a little greedy when everyone else is freaking out. He always uses this great analogy of owning a farm. A farmer doesn't panic and sell his land just because someone offers him a low price one day. He focuses on what the farm produces, the corn, the soybeans. But with stocks, people get obsessed with the price every single second. For Buffett, when a stock price falls, it's not a disaster, it's a sale. It's a chance to buy more of a great business for cheaper. And that really brings us to the final thought here. As the entire market is gripped by fear over what AI could do, Buffett is just quietly building his cash fortress and sticking to a philosophy that's worked for decades. So maybe in this strange new world, the most valuable asset isn't some new technology at all, but timeless advice on how to think for yourself.